Hello everyone, this is Przemysław Radomski, CFA, talking to you on Saturday, October 30th. And in today's video, I'm going to show you just how ironic the situation in the gold market currently is. Let's get to it. The ironic thing is that the rally that we saw recently, for the entire month, only made the situation on the gold market more bearish. Yeah, I said it, and that's exactly the case. How can a rally be bearish? Well, one of the reasons is that you need to have a rally for a top to form. Of course, in general, neither rallies nor declines are bullish or bearish necessarily. Bullish or bearish refers to the outlook. But what I want to show you is, not just that gold broke below its rising support line, and the previous times when it did that, major declines followed, and these declines were sharp, and you definitely remember all of them if you've been interested in the precious metals sector for more than a year. What does it tell us? It tells us that something similar is likely to take place soon, probably very soon. But the thing that is most ironic is what we see on the week-to-week basis. On a week-to-week basis, we see yet another attempt to rally above the 1800 level, which failed. It was preceded by a previous attempt to rally above the 1800 level, which failed, and also yet another weekly attempt to rally above the 1800 level. The 1800 level could be viewed as important resistance, but it's gold's movement relative to its 40-week moving average and 60-week moving average that is particularly interesting. Last week and the previous week, gold rallied, but then moved back and closed the week very near its 40-week moving average. And at the same time, it failed to rally above its medium-term declining resistance line. Why is this so important and so ironic? Because we saw the very same thing in early 2013, right before the huge slide. So right before this happened, here's what we saw. An intra-week attempt to rally above the previous resistance, which was provided by the previous lows, and also yet another previous attempt, and there were also a few other attempts. Of course, the history does not repeat itself to the latter, but it's relatively similar. It rhymes, no wonder these moves are not identical, but very similar. I previously told you about gold's position relative to its moving averages, and please note what happened. In 2013, gold tried to rally above its 40-week moving average, and it tried to rally above its 60-week moving average. It was trading very close to them. It tried to break above its declining medium-term resistance line, which formed in a very similar way as the recent one, and it failed to do so. And what happened next were major declines back to the previous lows. And I expect something similar to happen also soon. But that's likely just the beginning of something much, much bigger. Let's do a quick move back and forth between the charts so that it's clear how similar they are. All right, they are in different scale because on this chart you see also the following decline. On this chart, you don't see this decline yet, as it's still ahead, of course. But the overall shape that I marked with the red rectangle is similar. Please note the position of gold relative to its declining medium-term resistance line. It's all aligned. And the great irony is that the recent rally that I don't want to say everyone and their brother, but like a lot of people thought that this was the beginning of something really, really major and bullish. It was actually a perfect bearish confirmation, as it aligned so well with what we saw in early 2013. And on a daily basis, Friday's breakdown is truly meaningful. It tells us that this counter trend rally is likely over, and that what's likely ahead is well, severe declines, just like we saw in 2013. Again, the history doesn't have to repeat itself to the letter, but it's likely to be similar enough to make serious gains on it. Of course, as always, I can't promise any kind of performance. Whatever I'm saying here is just my opinion, not an investment advice. Please read the disclaimer below the video. But I do think that, well, what we see right now is gold being on the verge of a severe decline. There will be major buying opportunity at the bottom, of course, and I do think that gold, silver, and, well, in particular silver, are likely headed much higher in the following years, but in the near term, lower values are likely just ahead. Right, so thank you for watching. Have a great weekend. And if you're not yet my subscriber, I invite you to subscribe to my gold and silver trading alerts, and also take a look at our other premium products. That's at sunshineprofits.com. And if you're not yet on our free mailing list, I strongly encourage you to sign up for it. You'll not only stay up to date with our free articles, but you'll also get a 7-day free trial of my premium service, and also premium services of my colleagues. So once again, thank you for watching. Signing off. Bye bye.